Welcome back, everybody. I do hope you guys have been awesome. If you're watching me for the first time, my name is Nas100, and if you're not subscribed to the channel already, please consider subscribing. Click the notification bell so that you get notified every single time I make an upload. Comment, let me know what you think, share the video, and let's grow the channel. So in today's episode, we're just gonna cover up a few things. So number one, what I want to talk about is very important. I want to show you guys how price reacts when it closes. So far we've been talking about what happens with price, when a candlestick opens, when you daily, weekly, monthly candlestick, when it opens. But now there's also another thing that you need to understand and look at when price closes, because this is actually where you can get, your setup for the following day or for the following week or the month or the next year. In fact, that's how far you can go. You know what I mean? So price can actually show you if it's going to move up or down the following day or the following week. So we're going to be simply talking about the relationship between price opening versus when it closes, right? So I do hope you guys so far are in line and in alignment with everything that we've been talking about on this channel. And guys, I always say this: if what you're currently doing is making money for you and is consistent, you don't need to change your strategies, okay? Because this is the mistake that we always make in trading, simply because you saw somebody talking about fancier things, you now want to learn about that. If what you are doing is making money, stick with it, continue making the money, because at the end of the day, it's all about money and being consistent. But this channel is basically here to help every single trader who wants growth to grow, right? So in order for you to find consistency and profitability, see, these are the things that we're going to be talking about. And on the next episode, actually, I'm going to be talking about, I know this video is been long it's been a long time wait, you know what I mean? So we're going to be talking about I'll call him special gentleman in the industry. His name is Rolio Jack, and he basically, how can I put this? He doesn't consider himself to be a scam exposer, but for the lack of terms, he's a scam exposer, right? And so basically what he does, I think I talked about this in some previous episodes, but if I didn't, so what he basically does is he takes money from his own pocket, invests it in signal groups, the mentors that you are currently looking at, the guys that we look up to in the industry. So what he basically does, he looks away, turns a blind eye to the lifestyle and actually buys the signals, look at the profitability of the signals, and does a review, posts it on his channel. So I believe that is very important, because he's basically addressing what I've been saying to you guys, that a lot of these guys don't know how to trade, and majority of them make money from selling signals and courses. And this is basically the lifestyle that has been sold in trading, because everybody nowadays wants to be a mentor, you know what I mean? So I do hope you guys will be tuned for that. Stay tuned for that. It's gonna be a very interesting topic. But in fact, on this particular video, I wanted to talk about the COT report, but I think I'm gonna have to do a separate episode on that, and so that I can talk more in depth, because today I just wanted to focus on the chart. So obviously we're going to be looking at Nasdaq, but guys, this is not a Nasdaq strategy, okay? This is absolutely not a Nasdaq strategy. I personally love trading Nasdaq because of the volatility, you know what I mean? But you can apply this trading method throughout every single, asset. It could be Forex, could be crypto, wherever there's a candlestick, basically, because what we've been talking about in this channel is how to interpret, candlestick formation into, your day-to-day trading journey. And this can apply in all asset classes. So don't make the mistake simply because I'm always trading Nasdaq. Don't think it's a Nasdaq strategy, basically. That's all I'm saying. I prefer to trade Nasdaq, and I have my reasons why I like trading Nasdaq. It's because of the volatility. because we all know currencies can tend to be very slow and very sluggish, and I'm a day trader, so that doesn't work for me basically. So I'm more of an indices type of guy, you know what I mean? But that's your own journey. Discover what you want to trade. And so if you have any requests, maybe you want us to look at a particular type of asset, whether it's a currency, doesn't matter, just hit me up, comment, just let me know what you want me to analyze next time on the channel, so that maybe I can cook something up and actually show you guys that this thing is not just a Nasdaq thing. It can be applied to almost every single, let me not say almost, but it can be applied to anything that has a candlestick, because candlesticks all form the same way, understand? So without wasting any more of your time, content that is offered on this channel is for educational purposes only and should not be considered as financial advice by anyone or any institution at any given point in time. So I don't do signals. All my courses are free, mentorship is free. So like I said on the previous video, that once the channel hits 100 subscribers, I'm gonna dedicate one long week whereby we're gonna have trading sessions on a day-to-day basis with you guys and actually walk you through the market, watch me trade in real life time, you know what I mean, so that you can actually see how I approach these things when I start trading. So let's get to the charts. So everybody, hence I was saying that I actually just wanted to talk about price reaction in terms of month ends and versus the beginning of the month or the week. So basically we're going to be looking at open versus close, and what you need to expect to happen to price when it closes versus when it opens. So we have already dealt with what you need to be looking for during price opens, the accumulation and manipulation and distribution. So this strategy is basically inspired also by the Wyckoff schematic method, and that's something, I believe, a topic that will enter in the near the future episodes. So what had happened, so I'm basically gonna just run you guys through what I've been looking at and how I actually managed to capitalize on this move, right? So like I said last week on, I think it's episode 11 if I'm not making a mistake, but I did mention that from last week that when price shifted structure, we can expect this current week to start off bearish and end up bullish, or which is exactly what happened when we look at it. So price opened on Monday, it was a bit bullish, but overall had a pull back to the downside, because remember we had recently broken structures right there. So we were kind of in a way expecting pullbacks, and this is actually what we got. So if we look at the 4-hour time frame, of which is basically where I actually framed my buy entry on this particular fair value gap on the slower time frame, right? I mean basically. And now what was like the selling point for me to then conclude that price is gonna actually move to the downside? Actually this week I took only 2 trades. One trade was executed on a Tuesday, and then the last trade I took was actually yesterday, which was Thursday moving into today. So looking at how things are moving currently, my TP was right there, it hit, and so officially I'm out of those trades. So I'm going to put a screenshot for you guys to actually see what I was basically referring to. Let me see if I can pull up that screenshot. Let me see, just a moment, because I don't want to go edit a lot. Basically the TP hit. So this is the screenshot that I took on the trade. Thank you. So this is basically, the screenshot. So I had taken my trades on Thursday, and I'm going to explain why I went short on Thursday and what made me to exit. And I believe Wednesday, actually made a mistake of assuming a buy position. I was actually prepared for an uptrend and a spike, and I have a reason for this. There's actually a very valid reason why I decided to look at price now, anticipate price to start moving to the upside. Let me just remove these because they are a bit disturbing. So let's move into Tuesday, pardon. I just want to go to a lower time frame that you guys can actually pick up. So the first confirmations that I had that price was gonna move to the downside for the week up until this fair value gap was, number one, the shift that happened on Monday, right? It's not clear here. There's a shift in structure that happened on Monday, and it was my biggest confirmation that price was going to move to the downside. So as we can see, it's a big mess currently here, and it will need a trained eye to actually identify this. So higher high, higher low, higher high, basically shift. Remember what I always say, move from the top directly with no internal structures. So you can actually see the structure taking form right here. Let's start here. Higher high, higher low, higher high, shift, pull back, and now press a trend into the downside. Now, this was my number one confirmation, but this was my selling point, right? Of which happened Tuesday. It was a very clear break in market structure, and this pullback. So normally, I did make mention to you guys, I'm going to start talking about the rules of market structure as time goes, but there is a theory that I actually noticed about market structure, and it happens when price actually has a shallow break. So every time there's a shallow break in market structure, because you can see this break is not really like a deep break, so it's more of a shallowy type of break. Let me highlight it so that you can see what I'm talking about right there. Nope, what am I doing? Pardon, sorry guys. Okay, so this is the shallow break I'm talking about. So it's not necessarily a deep retracement, a deep break. It's more of a shallowy break, and then so every time you see a shallow break in market structure, just expect a deep pullback, maybe to your 62 point whatever Fibonacci level, or 70% of the Fib level. So that's what normally happens when market structure has a shallow break, right? So this is where I actually enter my trades, my first trades, and started trading to the downside, and I exited somewhere there. And moving into today, right? Moving into yesterday, pardon. So I noticed that price traded actually into the fair value gap at the end of that day, but I was not yet confident because I was actually looking for a break in the opposite direction in market structure. But the moment I saw price moving, started to trend to the upside and creating invalidations along the way, the second time price traded into that fair value gap, I had already concluded that I'm going long. So this, honestly, guys, this is a very risky trade because there was no break in market structure. Okay, so don't normally do such. Rather focus on what I've been teaching you. Price will accumulate or open, starts to trade sideways, the false move, and then the actual move in the opposite direction. Rather focus on that. So identify your breaks in market structure before you can do anything, because even with me, had price not broken structure, right? Had price not broken structure, because here's structure, this is the point of interest. Okay, so had price not traded above this area, I would have burned. I repeat, if price did not break market structure, I would have burned. So here was a matter of impatience on my side, and I do not encourage you guys to do that regardless of whatever, because yesterday I actually went against my trading rules in terms of identifying the accumulation. identifying the false move or the manipulation, and then the break of structure in the opposite direction. So I violated my own rules, and in such instances, price tends to burn you. You know what I mean? So avoid at all costs, this thing of going against the rules. So that one is a fault on my end. Okay, it's a fault on my end, and guys, I highly do not recommend you do that. Always identify a break in market structure, right? Because the week is bullish. Remember what I said last week. It's gonna start off bearish. Go watch the previous episode. I talked about this. It's gonna start off bearish, then end up bullish. This is what I was talking about. And remember what we talked about in the previous episode, that sometimes we expect the manipulation and the break in the opposite direction to happen the first day of the week, and it doesn't not necessarily pin out in that way most of the times. You understand? So here on Thursday, this is where the actual move actually took place, right? This is actually where the move took place. So I actually had 2 trades yesterday, and so in total this week I took about 4 positions. Position number 1 was right here. This one I kind of cracked. I chowed that. But the second trade that I took was, when price started trading here, I took a buy position because there's a reason why. So I just assumed that simply because now price is traded below these lows, because there's liquidity resting below those, simply because of that, I just jumped in conclusions and assumed that price is going to move to the upside. But price was not yet ready, right? Price was not yet ready to move to the upside. Because of what? There's a fair value gap that had to be mitigated. This is the fair value gap that we highlighted on the 4-hour time frame, right? So price had not traded into that, so it had not yet found support, relevant support, right? Of which is the support that we found around, I like whole numbers, 17,800, right there. That's where proper support was. It was confluenced by this fair value gap that we highlighted on the 4-hour time frame. So the moment price traded into that, it started just slightly moving, and then towards the opening of Nasdaq, price skyrocketed to the upside. And honestly, I had my position there, the risky one that I'm telling you about. I highly recommend you do not do. That was the first trade. The second trade that I took was actually on the retest of the structure, right? So let me pull up the screenshot again, so that I can explain it properly. Thank you. There you go. So check this out. So position number 1 was the risky trade that I'm talking about, I was referring to, right? And the second one was on the pullback, on the retest of this previously broken surge. So it was basically an order right there. It was basically an order, and it was filled with my stop losses below there. Remember what I said last week? You put your stop loss below the low that broke structure, right? Of which my stop losses were right there. TP was up there. Let me show you where my TP was. The TP was basically above this area, this high right there, because it has to form what? From the break, form the higher high, higher low. We need to see another higher high, which is why my TP was right there, right? So that was basically the history behind what you could have done, basically. So guys, this strategy is, I'm not gonna put tags on it. If you can just learn what I'm doing on the channel, you won't need any other thing ever again. Just practice and master what I'm teaching on this channel. You will never see the level of consistency that you will find on this, right? Because as much as you can take trades once or twice depending on your schedule. If you are a trader who's always on the charts, a day trader, you can have up to 5 positions every single week for every single day. You know what I mean? But I wanted today to basically just explain why I don't like trading during month ends or the end of the week. I'm going to explain that. It's very crucial. But as you can clearly see here, right, resistance turned support, a broken structure. You see this every single day. Every single time I come on the charts, I'm going to show you this. Hence, I said to you that I'm going to implement the strategy on the channel and actually show you guys how this thing always pans out. Right? Let me show you now what I'm talking about. So if we look at the nature of a candlestick, right? Don't mind the candlestick. Let's change color, make it red. Change opacity as well, make it dark. And let's add our wicks. Let's add our shadow. Right. Just bear with me. Just bear with me. Okay, how do you bring something to the front? Or was I supposed to draw the wick first? I think I was supposed to draw the shadow first. Okay, I'm sorry guys, just a moment, because I want the lesson to be proper. So let's start with the shadow and then add the body. Come on. Thank you. There you go. Don't mind my candlestick. Leave my candlestick alone. It's perfect. There you go. Now I want to show you guys something, and what I'm going to show you is as crucial as it can get, because there is a reason why I do things the way I do them. I always tell you guys this, that there's a reason why I look at the market the way I do, right? So every single time price opens, it's gonna, in this instance, the bearish candlestick, right? It's gonna open, and in the opening, it's what we were talking about, right? We're gonna have, an accumulation, of which is the opening part, and normally this happens during your Asian sessions, right? And then you're gonna have the manipulation during London, of which is the false move I'm always talking about, which forms the high of the candlestick, right? And then we're gonna have a breakaway in the opposite direction, violating structures, and you're gonna have a pullback, and then price is gonna start to trend to the downside, right? And now here's what you need to be careful of. The moment you start seeing price, let's say towards your end of the week, the end of the day, the moment you start seeing price consolidating after it has created its move, just know that it's preparing to close, and it's going to have the same effect it had when it was opening. So it's going to start accumulating again, or consolidating, for easier terms. It's going to start to trend sideways in preparation to close, so that it can create a new manipulation, a new accumulation, or an area whereby traders are going to be trapped, and then it's going to manipulate again, and then if it shifts structure, it's going to be on the opposite, and then it's going to start trend forming a new candlestick, right? So I'm going to have a topic on this. I'm going to have a topic on this, an episode on this, whereby I'm actually sitting down dissecting this thing to you guys in a way that makes sense. But if it's not making sense, just let me know in the comment section, so that I get back to it. So the low of the week has been created. You see, I want to show you this to you. Monday, price opened, started accumulating, started trading at the downside, all of that noise, only to form the low of the week. So one might have assumed that the low of the week probably would have been formed on Monday, or the high of the week was the high that we got on Monday, or what. But remember what I always say, always identify what the area that is opened, the false move, and the breakaway in the opposite direction, then price moves. Always identify these. You need to identify your accumulation, and then the manipulation or the false move, and then the break in the opposite direction. So price has been doing what for the whole week? Price has been accumulating, and then finally manipulation, break of structure in the opposite direction, pull back, price is now starting to trend. In preparation to do what? To close for the week. So it has already closed for the month. So we are currently in the new candlestick. We are currently looking at the new candlestick for the month, in fact. So from here moving onward is a new month. So what do we need to be looking at? We also need to be looking at the manipulation, the accumulation, and then manipulation for the current month, until we find what? The breakaway in the opposite direction. So there's not enough data as yet to conclude if price is going to move up or down. Remember what I always tell you guys, do not predict the market. Don't try to be a prophet of the market. React with the market. When you see a break, it's time for you to prepare to enter. When you see a pullback into the broken structure, that's your entry area. Price starts trading, and when it starts trading, you identify another some sort of consolidation or a breakaway in the opposite direction, then you exit. It's very simple. It's not complicated. Once you do this, if this could be the only thing that you focus on in your trading journey, you will not have any sort of problem. Yeah. Okay, everybody, so that's the end of the video. I do hope you guys found that very insightful. If you have any questions, just let me know in the comment sections, and then I'll get back to your requests as soon as I can. So please feel free to make any requests. If there's a particular type of asset you want me to analyze, it could be a currency, it could be crypto, it basically doesn't matter. So just let me know, because I've been getting requests on WhatsApp in terms of what to look at next time. And what I want to do is for me to monitor if all of this content is being consumed in a conducive way, in a way that actually grows you. I want you to do an analysis an analysis based on whatever it is that you want me to look at, and then I can do a review on that and then come talk about it on the channel. But of course, you will give me permission to do that. I won't post anything without anybody's permission. And yeah, it's just in the spirit of respect at the end of the day, you know what I mean? I am a content creator, and I don't want to lie to you guys, because I've been getting questions in terms of why do I do everything for free. Basically, some of you already know I'm a public speaker, right? And I use platforms like this to basically voice out my opinion, and content creation has been that for me. So I actually enjoy doing content creation since I'm a speaker as well, you know what I mean? So yeah, it's just a matter of expressing myself and doing what I love. Basically, I love talking. I actually have a relationship with some of you on the channel, and you guys already know how much I love sharing information, which is why, guys, I am a public speaker and I enjoy it so much. So don't feel guilty that, you know, I'm not charging anybody anything. I trust me, I'm doing what I love, which is why I'm consistently trying to push to have content every single day, you know what I mean? So just enjoy, share the love, spread the love, like, comment, let me know what you think, share the video so that we reach a much wider audience, so that we finally hit the 100 subscriber threshold, so that we can start having our live sessions, you know what I mean? So without wasting any more of your time, guys, you have been wonderful. May the good Lord bless you all. Peace out.